Did you up to that point have any knowledge or interest of real estate in general?
Zero.
Were you following real estate?
My knowledge in real estate was, at the time in Merchant Bridge, we were working on a deal that never happened.
Did you think at that moment that what happens if I can't deliver?
There was a clear termination clause that was 1 year rent, which is I'm on the line for that 16 million.
Is it GCC LP's interest in Spain or
Mexican, funnily enough. So
Mexican interest in Spain?
Yes.
So, and why do they use you?
So
how do you come to the Before we get to the end of this, when do you sleep? I'm Hashem Montasser, your host, and you are listening to the Lighthouse Conversations, a podcast featuring entrepreneurs from the world of arts, culture, tech, and food. Our guest today is someone very special. Abdullah Alajaji is a Saudi national who grew up in Dammam in Saudi Arabia, worked for Aramco, then went to private equity, and then launched a real estate business in Dubai called Driven Properties. What's particularly interesting about Abdullah is his entrepreneurial skills and how he worked in a business that was frankly already quite crowded in Dubai, but found and singled out in a single opportunity, was able to grow Driven Properties, which today has more than 650 employees and multiple sister companies, and even operates outside of Dubai in Saudi Arabia, in Egypt, China, and even in Spain. I think you'll find this conversation very interesting for a number of reasons. One is we haven't covered real estate much in this podcast. And another day, someone told me you haven't covered tech much. So if that's the case, please write us in the show notes or send us notes. Let us know. We'd be happy to cover more areas. Secondly, I found Abdullah particularly intriguing, the way he thought from the beginning how to build a business with multiple facets and not just do a real estate deal. I think that brings out a side that's different from maybe other people working in real estate. It's probably also one of the reasons behind his success. And the last thing I want to mention is he's spoken on the podcast about giving his employees shares in the business, the senior partners. And I think that creates a ownership culture that I am very much for. And I would love to see more happening in the Middle East. Abdullah, welcome.
Thank you. Thanks for having me.
I'm very happy to have you with us today. I'm going to dive right in and we will meander a little bit. Bear with me. So the first question I have for you is, you went from what is the epitome of corporate life at a place like Aramco, which is in Saudi, the real corporate job is working at Aramco.
Yeah.
To being a full-fledged entrepreneur with all the risks and highs and lows that come with entrepreneurship. Was that a plan or did it just happen by accident?
Was that a plan? Nothing is planned in life.
I mean, you had stations in between, but I'm saying the mindset of someone working for a giant company like Aramco is very different from starting a business or taking the risks with the business.
Completely. So in the corporate life, I did some banking in Samba and Saudi, and then I did some private equity work at Merchant Bridge and UBS. Part of it was in London and part in Dubai. So during that process, it was a lot of corporate life. But I think within that, it gives you some discipline to understand what's right and what you can do and what you shouldn't do, even as an entrepreneur. So it did help me a lot in clearing up the vision of if I were to do something, what are best practices?
But was that something you had in your mind that at some point, if the opportunity presents itself, I want to do something on my own?
When I was in Aramco, and I remember that day, was it 2004, 2005? It was the day of the death of Rafiq Al-Hariri.
Okay, Allah
yarhamu. And I was sitting in my desk in corporate planning in Aramco and with some of our colleagues. And that day, somehow, when this happened, I thought, you know what, I like working here. I like this desk, but it would be really nice to do something on my own. That aha moment, that eureka moment. Of course, you don't
happen overnight,
and you don't know what it is that you want to do, right? But it happened. 7 years later.
Do you come of a family does your family work in corporates, or are they business people, or are they?
My father always worked in government.
Okay.
My mom worked in education, so she was an instructor at King Saud University.
Okay.
So no corporate,
so the gene
no
is
entrepreneurship. That's the gene. Yeah.
Okay.
But my grandfather was a great entrepreneur.
He was?
Yeah,
okay,
yeah.
so that's where the
Yes.
comes from. Because, Masan, I think of myself, my parents, similar to yours, I mean, we're both in education, professors at university.
Yeah.
So I have, growing up, we never had any business conversations, over lunch or dinner, because no one understood anything about business.
Same. Yeah.
My dad spoke about theoretical stuff, and we tried to follow him. And so did my mom. So when I wound up being in business, this was for my family also, very new. But if you had a grandfather who was an entrepreneur or a businessman, so did you meet him? Did you spend time with him?
Of course, I did. So my grandfather, Allah yarhamu, was alive until I was 18 when I went to college in the US.
You interacted.
So I spent a large portion of my teen life and especially my childhood life with him, learning how he grows dates in his farm, how to make investments in cement and up and coming cement factories. I enjoyed that a lot, and I think a lot of that character, on how to look at growth in general in life, and how to grow something from where it is today, a seed, to a lot of trees and a lot of palm trees and a lot of dates, came from that.
A lot of our viewers and listeners tend to be maybe they are in a corporate job or in a position within a larger firm and considering a jump.
Yeah.
So walk us through that transition from your last job at Merchant Bridge, which was already kind of entrepreneurial, to be honest. This was not a typical corporate setup, from what I know, to the jump and what you went through.
Yeah, Merchant Bridge was a very small private equity firm that's focused on Middle East investments, in particular Iraq and Saudi were the core focus. I did not plan to leave Merchant Bridge, but it was there was an incident whereby our two of the founders of the firm have unfortunately passed by way of an accident. The company's private jet crashed out of Sulaymaniyah in Iraq. And then, we were kind of left in limbo. It was kind of surreal when that happened. I was in Dubai and Business Central Tower in Media City. And then one of the other partners calls and he says, we have unconfirmed reports that this happened. And
how many founders were there?
So there were 3 founders,
so
three managing partners, 2 perished, and then a lot of LPs, a lot of investors at the holdco level. Probably 15 or so. And when that happened, we're like, okay, now what, right? We were in the middle of an exit of our largest business, which was our telco in Iraq. And we were working with both the acquirer at the time, which was QTEL, now Ooredoo, and JP Morgan, which was advising on the sale, and our Iraqi partner, and JP Morgan was representing us. They were on the flight also, and unfortunately their head of telcos global and the Middle East head also passed. So all of it was very, very surreal when it happened. And then obviously we were left thinking, now what, right? We have to, look after the transactions that we already did, the transactions that we're doing, and the portfolio companies that we've built. And that took some time.
But I think because, you are not one of the founding members, you were still younger.
Yeah.
But to your credit, you didn't just sort of think about yourself and walk out. You stuck around and really worked hard with the team to manage the situation.
Yeah,
and finalize whatever the founders, the now deceased founders, worked on.
Correct. So at the time, we had to look after the shareholders' interest. Nobody had kind of that fiduciary duty that the partners had to the shareholders. We had to carry. So we stuck around for about a year and a half. Myself and one of my other colleagues, Tariq Kharma. And what we did was look after the transactions that we've done. Obviously, work with the shareholders. There were some disputes. This was public, and we managed to help our LPs and shareholders recover some of the interest that they had in the business, and settle with the other partners out of court. So that process took 1.5 years. During that 1.5 years, of course, you both become a lawyer, and you also open up to the market and see what's out there. What do you want to do? What's your passion?
But it's not just a lawyer, right? Because I would imagine high emotions, a lot of money at stake, frankly, divided interest. Shwaya, he said, she said, because there's probably, I wasn't there, but I'm just imagining. So you had to really play a difficult card there.
Completely.
To get your shareholders' interest, but also make sure all the parties are somewhat satisfied.
Being looked at as a whistleblower can also you can also become a rat. That's how divided interests are, and that's how emotions get in the way, right? At a certain point, you're in the business and you have data, and you're entrusted with large assets, and you have that fiduciary duty that no one else has at this stage. Meant that you have to do something, and you have to become a litigation expert. You have to become a politician, a diplomat, and a professional because we're also still exiting. We're working on an IPO with QTEL. All of this at the same time happened in that 1.5 years. In fact, the settlement day was 1 week later. The Asia Cell, which is the company that was at the heart of that dispute, floated in the Iraq Stock Exchange. So there was, like you said, there was a lot of emotion at stake.
And what did you do then after that?
So during that, there was a lot of what next for me, right? I'm thinking, okay, well, this is something that's going to see itself out at some point, and then I want to do something. And this is the moment I thought to myself, am I going to go back to corporate life or private equity or venture capital or banking, or should I do something different? And coincidentally, just along the way, one of our LPs, one of our investors, came to me. He said, "You know what? You're in Dubai. I need your help. I had bought this asset, prime asset in Dubai, and that was 1.5 years ago."
By asset, you mean commercial building?
It's a residential building, in JBR.
Okay.
And he asked me to give him some kind of advice on what to do with it, whether to rent, lease, sell. So I said, okay, I'd love to do that. I have some spare time. All I'm doing that now is lawyering and litigating. So I might as well do something fun. So I looked at the asset. I go to him in his farm in Diriyah and in Saudi, and I said, "So what did you do with the asset?" He said, "Nothing. I'm waiting for you." I said, "You know what? I had a quick scan, and I think there's something to be done there." He said, "Look, what I want to do is I want to rent the whole building to a single tenant. I'm an old man. I just want to relax, rent it for 10 years.
I want my income.
I want my income.
I don't want a headache.
Nothing." So I went out. I came back. I started, communicating with real estate agencies at the time.
Can I just interrupt you for 1 minute? Did you, up to that point, have any knowledge or interest of real estate in general?
Zero.
Were you following real estate? Were you someone that dabbled in real estate? No, zero.
Absolutely not. So my knowledge in real estate was, at the time in Merchant Bridge, we were working on a deal that never happened for condos in London. In Prince's Gate, I remember that we were converting into lateral flats to sell. That deal never happened. And I actually, at the time, didn't like the process, right? Okay. I never saw myself being in real estate at any point in time.
Because, we all grew up with these guys that, always knew the real estate market, that followed the numbers and this. And you weren't one of those people.
You know what? Being in this part of the world, naturally, you have to know some real estate. You live with it. We're not in developed economies where there's so many industries and,
Correct.
In Saudi in particular, it was everything
like
that people talk about. It's like a sport. People talk about sports, about real estate and stocks. Right. And same in the UAE for a long time until it got to that tier 1 standard. So that time I went back and I said, look, I spoke to a few real estate agencies. and they can hook us up with some operators. And then I went to these operators. I went to a hotel operator, two hotel operators, and then some family offices also approached us to said, you know what, we will take on this, and then we will sublease it. We'll give you that income that you're looking for. And then that family office presented the best offer. I went to the investor, my partner now, and said, you know what, this is the best offer they presented. He's like, okay, that's a good offer. That's about what, 7.5%, 8% of what I paid for 10 years. That's good income. I like it. Let's do it. So I went back to Dubai just to kind of, it's my own curiosity that I wanted to kind of, fill in. And I approached the same agencies from earlier, and I said, what would happen if I were to give you this asset
to
manage the asset? You get, a 5% fee per annum from the rental income. It's yours. And I approached 3 companies, and I told them very openly, I'm approaching the 3 of you. It's a very, very commercial kind of process that we're gonna, and we expect to pay this much. I made it so easy.
You approach it like a banker. Yeah,
exactly.
This is like a big off.
That's it.
Yeah, the numbers and your fees.
Absolutely.
Come on, real estate at the time, none of this existed.
Exactly.
This guy has like a small little bit a piece of paper.
Exactly. That's very primitive. Very primitive to say the least.
Yeah.
So they come back. They don't come back because they never came back. For weeks.
Them.
I chased them. Okay. And the fact of the matter is, when in banking, you're at Goldman Sachs or you're at Morgan Stanley. And I'm an investor. I have $1 million to invest in liquid instruments and bonds and equities, alternatives, whatever it is. I'll give you that $1 million. I know that this banker will call me every month, will send me reports probably every couple of weeks, will talk to me about trades on a daily basis. And I was surprised. This is call it a $70 million asset, right? And I'm chasing them.
Back of the envelope.
And then 2 weeks later, one of these companies comes back to me with an Excel sheet, like a very small table within that Excel sheet. It took you 3 weeks to give me that, 1 bedroom this much, 2 bedroom this much, 3 bedroom this much. This is how much we can rent it for. Not even a breakdown of each unit, the views, and
nothing.
That's it. Just
الدور الأول الدور الثاني وألف مبروك.
That's it. هو كده ما. I went there. I said, okay, you know what? There's a gap. But then at least it was an eye opener, right? That was the only thing. I was like, okay, there's a gap between what that family office had offered and the what I'm seeing now.
Did you instantly understand that this gap is an opportunity?
Yes. At the time, I was like, okay, so what's the gap? What are the costs, right? There's probably sales and marketing, probably maintenance, all of these things. How much could they cost? I went to, at the time, there was Ta'ziz, which is the Dubai holding kind of facilities management arm, and Idama. So I wanted to understand what service charges are, because that amount that was going to the landlord was triple net.
But I'm just pausing here, sorry, Abdullah, because there's 2 ways when I hear the story to look at this. One is, I have a client. I promise this client or this friend, in this case, or a combination, to come back with some information.
Right.
It's very frustrating that after all these weeks, I get this crap, excuse my language.
Yes.
Now, what do I do?
Yeah.
Or, which this has happened, was, you saw this part, but you also were like, well, there might be an opportunity here because these guys are clearly not very advanced in how they do this.
Yeah.
Someone else could do better.
Exactly.
So that's purely entrepreneurial in thinking,
Yeah. Look,
you saw the opportunity, not just the crap.
Yeah. Some would say, right? But I'd say, the opportunity was so clear that, there's that gap. And then I went back to him. I said, there's the offer that you got. There's money on the table. You have 2 options, right? You can give it to one of these guys, and they can manage it for you. All you have to pay is 5% of the income. That gap is still massive, and you're leaving a lot of money on the table. And he was very clear in that, I just want peace of mind. I want to sleep well. I know that I have 10 years, as long as the balance sheet of that entity is strong, they're creditworthy, they can service their commitments for the next 10 years. I'm happy with that. I'll leave money on the table. Halal alayhum. And I was like, okay, you know what? I'm transitioning from private equity. I have some time to spare. I can have fun doing this. Why not look at if there's that gap and I can address it, and it's a pure, it's there was arbitrage, but it was a pure value add play, right? What are you what value can you add into the to the property in order to make that margin, and can you make more? If these guys are saying this much, there is a chance that you can probably make more. When these agencies come back to us, the instant thing I was thinking, okay, are they, if they're being conservative, which they should be, I hope, right? Then there is probably room for more. Turns out I was right. There was room for more. So what I did was I went back to him. I said, you know what? If you're willing to let it go at that price, I'd love to take a crack at this. But I need a 5-month grace period. I need to fix the kitchens. I need to wrap the kitchens. They've been, untouched for 2 years. I said, yeah, of course. If it's you, it's you. I didn't have 16 million at the time to rent that, but I had 5 months.
Did you think at that moment that what happens if I can't deliver?
I did.
Yani, what if you come back in 5 months and you tell him?
So I knew there was a clear termination clause that was 1 year rent, which is that I'm on the line for that 16 million. My exit from Merchant Bridge at the time would have covered that. Put it this way, but it's a significant chunk of it's everything. It's literally everything. I put everything on the line.
Talk about the risk.
Some would say it was ballsy and crazy. Really,
I don't
really
think
crazy.
some would say. I think anyone would say you basically could be wiped out.
But
to put it very
easily,
wiped out from
yes. Look, but if the gap wasn't so massive, I thought there was a margin of safety. Again, I use discipline, even in investing. I don't take massive risks. I don't go, and
it's a somewhat calculated risk, but you're new to this business.
I'm new to the business.
If you had done this for 10 years, I'm telling you, and you're putting your own check, 16 million check, I'll tell you, you know what, you've seen, but you hadn't.
Correct, yes.
And you don't know, ultimately, the market could crash tomorrow morning. At some point later, it did crash. So there was timing, there were all sorts of considerations.
All of these things were at play. I just used a little bit of common sense, a little bit of understanding arbitrage and these gaps. And I spent some time, to be fair, understanding the liquidity in the market. So I looked at I was my own mystery shopper. I went and posed as a tenant with a couple of other buildings in the same area. And then within 1 week, 2 weeks, this is gone. It's like, okay, there is an actual market. So, and then all of a sudden the agencies were a little bit more active. So they said, we would like to take this on. Let's start leasing it. We have a list of clients waiting. We have relocations company waiting, waiting to push through. This was also a good time for the market in general. So timing was good. That was mid 2012, roughly. So it was at the time where the Arab Spring happened and oil prices started pushing, and the market started. So there was a period. One of the cycles is, I'd say, 2012 to 2014, 15-ish. When you had the impact of the Arab Spring, the Expo announcement, and all of these things happened at the same time, the oil prices, and that was a good time for the market. So in fact, the number that they gave us as an estimate, we beat that by probably 20%. Right? So in fact, the gap was even larger. So that was a 10-year contract, right? So in 2022 was the renewal. Needless to say, we renewed, and it's happy.
Well, you're sitting here today, so
I'm sitting here today.
It all went fine.
I'm wearing clothes.
You look fine. You're drinking your water. After 2008, when the market, Lehman Brothers and all of that, you remember this. It's before you started in real estate.
Yeah.
But there was a period in Dubai real estate where the market really went nowhere. And actually the stock market for many, many years. People forget that.
Yeah.
It wasn't always going this way.
Yep.
And we're going to talk about the ups and downs. But there were many years where it just went sideways.
Yeah.
Which in your business is not a great thing.
Yeah.
How much of it do you ever think of timing or the luck or fortune? Because I don't believe in luck in that sense. I believe people position themselves to get, to be fortunate in their lives. But do you believe that your timing played a big role, or you feel like there was a market to be developed anyway at any point in time?
There was one market that I thought immediately there is a gap, right? Which is, on the institutional side of things and the service. I experienced terrible service when I was a consumer, a large customer.
As a customer.
I was a big customer. I'd like to think, it was nice to come in and represent an investor, a friend, on an asset worth at the time $70 million, and I have that kind of, and then I get ignored and I get the short end of the stick. Why? I was like, okay, first of all, there's a gap in service. You should service 500,000 dirham customers and $100 million customers the same way. It's service. It's a standard. It's a book.
You didn't see any of that.
I did not see any of that. That's one. Secondly, on the institutional side of things, so when I wanted to get a report from these companies on what I should expect over the next 10 years and how will you do it, what's your proposal, all I get in Excel is an Excel sheet. That was not acceptable. That was not so. Institutionalizing that process was something that I thought there was a massive gap in, and I wanted to take a crack at that, and improving these service standards on that space. Over time, of course, we pivoted. We've changed. We've gotten into new verticals. Till where we are today. Of course, all of that was during periods of volatility. Yes, the first couple of years when we started were good years, but then there was that sideways period between 2015 and all the way to COVID. Right, that was more of a sideways.
So, what did you do during that period? How did you drive growth?
We really started to look at or try to find our moat, right? Our competitive advantage.
Yes.
Where is it? What is it? What does Driven do that the others don't?
And what do you think that moat is?
There are a few things. Our competitive advantage is our ability to act very quickly with our customers, with our investors, and with the wider ecosystem.
And how much is that you versus now a company approach?
That's a culture now.
That's a company culture.
Correct.
So your senior figures within your firm would operate the same way today. If they're given an opportunity, they will jump, they will move. By the way, I tried your services on the. Yeah. I was a seller of an apartment, and it was fantastic. You don't even know that.
Okay, I don't know that, but that's good. I'd like to know more about this.
A few years ago, and it was exactly what you described.
Amazing.
The person servicing me, the senior person, was quick. Amazing. The junior person was on his feet.
That's amazing.
They moved quickly. They pushed. They did all the things you would expect.
Yeah.
Maximize the price, but were fair. Professional. Yeah. I wasn't even in the country. They took a power of attorney. They did it on my behalf.
Yeah.
Yeah. And the whole process was fantastic.
I'm glad this is the case.
Just to give you a sense as you said, from the 500,000 all the way up.
Correct. Yeah, exactly. So from our perspective, where we also see our moat and our advantages is our tech, right? Tech for us is something that we continue to develop every day. And that's where, we continue to innovate. So for us, our system, the way we operate, whether it's how we visualize the future, how we look at trends and forecasts through a combination of machine learning, data science, and now, of course, AI is something that we're significantly investing in understanding, so that we can really make an impact in understanding behavior, both at the consumer level and at the wider business-to-business agency level.
So I can see potentially AI, helping you customize your service to consumers. How would it work beyond that for you? What would be potential applications?
So for a consumer and for agents, right? For agents, now we have one of the things that we started doing is creating the Diva bot, Diva being the Driven integrated virtual assistant, which doesn't only help the buyer and the seller and kind of finding what they want, but also the agents within the ecosystem. So, I know that when other in agencies, they have this massive WhatsApp group with 500 users. I need this, I need that. I have this. Please find me this. Gone are the days, right?
Yeah, and they still do that.
And
then they spam you.
And then they spam
you. If you talk to them once, they send you a million other offers that you don't care about until you block them, basically.
Absolutely. So we have these tools, these applications, the where you don't need to do that. If you're an agent, you want to find another listing, and I know, agents and consumers and everybody, even in banking, nobody likes to use a CRM, right? So we integrated that with the CRM through into WhatsApp. So now, okay, you like WhatsApp? Great. Here is your CRM in the WhatsApp. So, what are you looking for? You're, buying or selling. That's the agent, right? So, I'm looking to buy. I want a city walk apartment. The budget. What's your budget? 3 million. And then I'll just give you a list of all of these listings on your WhatsApp with the brochure, with everything that you need. And then you can just send this right away to the buyer. Now, we took that a step further, and we made these Diva applications both to the buyer and to the seller. So everything's automated. You want a brochure from 2005 for a project that was delivered in 2005, it's there. You want information on it, it's there. And it's all, nothing of it is manual.
Would that help replace some personnel? Is that how you think of it?
It won't necessarily replace personnel.
But it will make their job better.
It will make their job more efficient.
More effective.
Exactly.
Instead of, if I'm a real estate broker that works for you, instead of it taking me a week to find an apartment for Chirag, it might take me now 3 days.
Or less.
Or less,
or
because
much less.
of this efficiency.
Exactly, because of the efficiency. So
that can be massive.
That is already massive.
Are you seeing the results? Are you seeing already?
We're seeing the results. We measure the efficiency levels at all verticals within the company through metrics that are related to this. How fast you are. Did you improve the sales per square foot? Are we efficient in terms of space versus productivity? All of these metrics we look at on a weekly, on a monthly basis, and then we go from there, right? We see, okay, well, we did better here. How do we even make it better? How can we use technology? How can we make the CRM do better things? And how can we use analytics and data science to forecast what's going to happen, in the next 3 months, in the next 6 months? And then we get that CRM to learn more about our consumers' behavior. Where are they coming from? Who they are? What are the demographics? Why did the first 3 months of the year saw a massive entry from the UK or from Germany? What are and then all of these things are immediately captured. And then the CRM, rather than the marketing director trying to figure this out manually, they'll see it. They'll get these trends right away.
How much of your business is B2C versus B2B?
I would say right now it's close to 50-50.
Yeah.
So what we did is
That's amazing.
It is.
Yeah, and you've also buffered against these gyrations in the market. As the B2C is probably the top of the funnel, so it's what people see, what I see, going around Dubai or elsewhere.
And I tell you what, that's another pivot, right? So in 2015, I would say, to 2019, this is where we started our B2B business. So what we did is we invested capital, provided liquidity solutions to large developers here, buying buildings and trying to distribute these sales locally and internationally. Internationally in China and Japan and other markets in Europe and so on. Locally, we went to agencies, of course, our industry colleagues, and we created a B2B arm within Driven.
So when you say China and Japan, what, you get on a plane and just go and talk? I mean, how do you find these people?
So we partner with distribution channels that are other real estate companies, immigration companies, banks, lawyers.
Were you still driving this process, or you have a team that
was at that time? I was driving it.
So you said to yourself, I need to start looking at the B2B side of the business. Let me do the business development up front.
Absolutely.
Okay.
Yeah, that's exactly what happened.
Okay.
So then, in 2000, let's fast forward 2019, 20, and then 21, and then post-COVID things kind of went that way. We thought the local market is strong enough to absorb enough B2B business so that we can take on exclusive mandates. Right now, so we set up what we call Refine Development Management. That's a company, it's a development management company that currently runs about $12 billion of assets, of exclusive projects, all around and only in Dubai. So, and Refine, they do not sell direct. They only sell through other companies, whether it's local or international. Two reasons for that. First of all, agencies were always reluctant to go to other agencies to sell because of database and 100%. This is my client. I'm selling a Seamere villa in Jumeirah Bay for 70 million. Now they have my client. What are they going to sell him in the future and all of that? Of course, that's something that agencies are wary of. Although we have the ethics of the business are always intact, at least throughout the business partners we work with, and vice versa. However, we just made a conscious effort to say, you know what, there's a Chinese wall There's another entity, that's another organization that's doing only B2B, no direct sales. So, you can work with Refine on any project that we have. But if you are another business partner, the driven guys can work on these projects
like anybody else.
Like anybody else, exactly. There's a most favored nation approach, and in a way that's normal. But then the other companies and other platforms and other businesses can work on these projects and can thrive through the Refine platform. So Refine has become a very, very large component of our business. So our three biggest, let's say, portfolio companies, we have Driven Properties, of course, Lamar Development, which is our development company, and then Refine Development Management. On the Driven side, we do sales and marketing and property management and the likes. At the Lamar development level, we do greenfield developments, anything from scratch, from the ground up. And at the Refine level, we do development management, meaning we help private developers thrive. So they go from plot to building, all the way from the construction, the consultancy, what kind of unit mix, sales and marketing, collections from customers, escrow account, all the way to handover and property management.
Clearly, I'm getting the drift that nothing you do, it does not have a purpose. So you clearly very purposely branded them separately, of the Chinese wall being one of them.
Correct.
But a naive approach, I could come to you and say, Abdullah, you have Driven Masan as a brand trusted already. Why not have all under Driven? And this way, Hashem, who already trusts this brand, will go to the others. But you clearly wanted to set them up at three separate brands, or not three, more.
Yeah.
Why?
So first of all, I wanted the entrepreneurs taking care of these businesses to really have a sense of purpose and to create something.
That's the key component, I think.
That is the component.
So you have many Abdullahs essentially running these
effectively,
right?
and okay, it's easy to try to leverage or piggyback on the brand. But it's also fun and engaging and exciting to create another brand and to really feel proud.
They are incentivized at that level. Do they have skin in the game? Do they have equity
absolutely.
in that business?
They
do.
Every single company, they have significant equity in the business.
Okay.
Yeah.
So I feel I'm a young guy. I'm coming to you. I'm starting one of these businesses. If it grows, I will grow with it.
100%. So one of the very exciting the things that we're doing now at the corporate level, even at the Driven level, is we're creating cost centers, changing them into revenue centers. So I'll give you an example.
Like the Amazon model.
Basically. So for example, the marketing, we have a 40-person marketing team. And then what ended up happening is our portfolio companies, our subsidiaries, I started using, okay, I need that graphic designer, I need the web developer to do this for me. I need a website.
Let me set up the business to support all of this.
So I said, you know what, yes, let's do mass marketing as a service. So we created a company. It's called the marketing department. So the marketing department, Driven, becomes a client of the marketing. And so do the other companies. Their clients, they use these services for a fee. So that became a revenue center.
This is how Amazon Cloud started.
Yeah.
I'm sure you're aware of the model. But the irony, sorry to interrupt you, which I think is just fun that Amazon.com, so the actual wasn't a customer of Amazon Cloud for 15 years.
Yeah, exactly.
That tells you something.
Yes. So it's about time. Right? So we did the same with recruitment. So we have a recruitment team that services Driven, but then started servicing the other companies. So we started recruitment as a service. And that's how development as a service with Refine also made its way. We did that with AML. So we have obviously our KYC and AML approach, which is a regulatory requirement now for real estate companies. And what ended up happening again is not only do our other companies ask for services
outside,
but colleagues in the industry, they said, you know what, we're too small to have a compliance officer and a KYC. Can you do this for us? So we started, an AML consultancy and a KYC consultancy. So we're doing that with many of the ancillaries of the business in order to make them into from cost centers to revenue centers to service our platform and other platforms. So we start with our subsidiaries, with our portfolio companies, and then we start going to the market, to the wider market.
That's incredible. So you have diversified across subsectors of real estate, effectively. You have diversified in terms of who you're facing, B2B and B2C. And are you also diversified beyond Dubai?
So yes, we have presence in Saudi on the property management side. We have an full-fledged office.
Saudi everywhere or Riyadh specifically?
In Riyadh at the moment. In fact, we have an asset in Jeddah, so we're also present in Jeddah.
Okay.
But predominantly Riyadh, and in Saudi we're doing mainly property management at the moment. So because of our tech, again, on the property management side, which is something that we've built, a lot of the REITs in Saudi, the real estate investment trusts that are publicly listed, use our services, use our software, and they use our property management services. And that's how we're present in Saudi at the moment. We're present in Saudi through relocations as well. So in fact, now our relocation business, which we acquired in 2021, it was a setup. It was a company that we acquired here, is now bigger in Saudi than it is here.
Do you envisage that business in Saudi over time to become as big as the business here, maybe even bigger? Can you see that happen?
The sheer size, absolutely.
So the size of the Saudi market alone.
But I tell you what, maybe the analogy I would draw is Hong Kong and China, right? So Hong Kong is Dubai. It's a finance entrepreneurial, all the entrepreneurs, fast moving, the finance district, the trade, the tourism, the traffic, the fun, the glitz, the entertainment. But the behemoth is China, right? And that's Saudi. That's what Saudi is to Dubai. So surely Saudi will grow in the same way. We see obviously the freehold market opening up. We see that taking up a lot of interest from international investors. Saudi has become the flavor of the decade. Everybody's talking about Saudi and the growth and what's happening there.
Is there any emotion that enters for you being Saudi yourself? I mean, is there anything when you look at this business, or are you able to look at it just the same way you look at Dubai or Egypt? Or, is there anything personal that comes to your approach to Saudi?
Absolutely. So I'm always amazed when I see what's happening in Saudi. When I see Saudi kind of taking the headlines, it's really fascinating,
and it's a huge transition even in your lifetime.
Completely.
Yeah.
Like I'm glad that I'm witnessing this.
Yeah,
right? We're witnessing
exactly.
this. It's amazing. It's like I haven't envisaged this in the last 30 years.
None of us did.
Yeah. So I went to Cityscape in November, and boy, it was. What's funny is that remember the 2008 days and Cityscape in Dubai when Dubai was just being built.
Yeah.
There was that buzz and that glitz and the
very
glamour.
Similar.
And, now Saudi is doing that.
Yes.
Dubai is not doing it anymore because
they don't have to.
It's mostly developed, right?
It's mature.
But Saudi, it's in development. There's so much happening. So it was really crazy to see. It was refreshing to say the least.
So you're looking at Saudi. Where else? Anywhere else?
So we're in Egypt, we're in Saudi, we're in China. So China, we have an office that does mostly the B2B. So it's mostly, so in Egypt and Saudi, it's Saudi and Egypt business. In China, it's Dubai business, but soliciting it from China.
Yes.
And then we have Spain. Spain is a massive market for us. We have a development office in Spain. So Lamar Development is already existing in Spain. We have 19 villas we're building in Marbella, and we just acquired a building in Madrid, in the center of Madrid.
Is it GCC LP's interest in Spain or
Mexican? Funnily enough, so
Mexican interest in Spain.
Yes. So,
and why do they use you?
So
how do you come?
So my partner in Spain, Henry, who's running the Spain development arm, spent a lot of time in Mexico.
Okay.
He's Swiss, but studied in Mexico. Has a lot of Mexican rich friends,
yeah, of course,
and
who want to deploy capital outside.
And we discussed with Henry how he can which markets are exciting, growing in Europe, and we zeroed in very quickly on Spain, both Madrid and Marbella, because of the similarity that they had around the time of 2021 to Dubai, because in Dubai, you remember the interest from Europe and CIS countries in Dubai because of everything that's happening there, both social and economic. And then you see what's happening in Madrid is a lot of the Latins, Mexican, Venezuelans, Colombians, Argentinians, they flocked into Madrid for two reasons. One is Miami became very expensive. Miami was their number one location. It has become so expensive and unaffordable. Madrid has offered a lot better tax advantages, right, during that time, or Spain.
The airport, also a lot less humid, but anyway.
Yeah, exactly. It's much less humid. And then at the same time, the airport, the Madrid airport, became the most connected to Latin America. So it became very accessible. Add to all of that is that they speak the language. So it just made perfect sense. So we said, okay, let's leverage on that trend of Latins moving to Madrid, and then we started seeing more French, UK, investors coming into Spain. Obviously, we had the Scandinavians and the Germans for the longest time doing Mallorca and Marbella, and the GCC as well in Marbella. So we saw a similar trend that we're seeing in Dubai in terms of international investment into Spain, and we said this is a market. This is a market to look into.
So the way you're describing this, there really isn't an upper limit to what you can do. I mean, it's a matter of how much you can get done in a certain period of time.
It's
the way you're building this.
Absolutely. So there's we don't see a limit. I don't see a cap. Right. There is a point in time where we say, okay, always what's next? Where next? So right now we're looking at other locations, other localities, other parts of Europe. But then you need to build these disciplines to really do that for you.
But that's my other question. So you're now in the enviable position where business is coming to you. You have multi-business, multi-country. So I'm sure on any given day, your inbox or your WhatsApp is flooded with different options. How do you then make decisions on where to say no and where to say yes? Because that becomes part of your challenge now. You're no longer the small startup that's just trying to, nip at the market. So how do you make those decisions?
Anything that's non-core for us. So we've had a lot of opportunities to get into businesses that are proven, strong cash flows, massive EBITDAs, private, where Abdullah, let's wear your private equity hat, come in, let's do this together. And I'm like, do I have the bandwidth? And right now, do I even have the passion? Right? I'm diving into that real estate story. That everything that I see, in the real estate spectrum, I can immediately tell whether I smell
opportunity,
growth or not.
And what drives your passion in this sense? So if the passion is part of it, what is it? Is it the size of the opportunity or your personal interest? Does it مثلا come in? Sorry, it sounds like a stupid question, but you're like, I don't want to spend any time in Kazakhstan. Just like, I don't care how big the opportunity is. I don't want to go there. Does that come in, or is it very much a matter of time and all of that?
No, it's not time. It's more where I feel I can have fun and add a lot of value. Doing it. So if it's a new development, is it something that's within our ethos, within what I believe is that this city needs or this industry needs, or this little locale or area or neighborhood even needs, and can we add value? What is it? Can we add our taste to this story, our distribution power, capability, our knowledge, whatever it is that I believe we can add value to whether it's a neighborhood or a development, and we can have fun doing it. That's where we decide, okay, let's do it.
Do you look back at all? Are there opportunities that you look on today, you say, I wish I would have done this?
Every time I did, I would have substituted that opportunity with something else. So I'll give you an example, and that's something that's happened about 3 years ago. There was on the development side, there was a time where Emirates MBD was selling a massive plot, because the previous owner defaulted on it. It's and I love the IFC, so it's just opposite the Gate Village, next to Burj Daman, massive corner plot that was 1 million+ square feet of GFA. And we were one of two bidders. That was early 2021. It was still, the signs of that growth were still not very much,
not where we are today.
Seen, not where we are today. Let's just say if the number was 320, and the second bidder was just behind us. We had a small kind of CP or condition precedent on the contract that. DIFC as an entity said, of course you can do, offices, residential, hotel, but then of course you have to go to some authorities like RTA to get these approved. From our side, go for it. We're supportive. Our investors wanted that CP inserted before we actually make that capital call, and that opportunity, because we were stuck with that condition precedent, was missed. The second bidder went for it, but then at the same time, about 2-3 months later, another opportunity came up, which is similar in value proposition. Now where I say, okay, oh no, is when I saw that this plot sold 2 years later for 864. So, but again, at the same time, the plot that we had purchased went up by the same value. So yes, would have been nice to have both.
Did you, on the second opportunity, go to investors and say, forget the CP, we have to move fast?
Yes, of course.
Okay.
And on the second opportunity, there was no CP. So it was a different, it was a different developer and different story altogether.
Okay. Do you look back on reflect and I mean, do you have the habit, I'm just saying this because I do, to go back and self-flagellate and say, I wish I would have done this one, or you are always forward-looking? Because there's entrepreneurs that can always forward-looking, always optimistic, and there are some that are, go to the rear view mirror and revisit.
I try never to look back.
I can see
whatever is, that's it. That's it. I move on, completely finish, go, move forward next, and do what's next. And that's also a culture that we've built within our team. You can say the entire leadership team at the Driven level, they really, they have the same culture, they have the same vision, they have the same approach. Something happens, just forget it, move on, go to the next one. In our approach, even when we develop, when we sell, when we like to buy and hold, but we're disciplined when we sell. We always leave money on the table, and we always try to add value at the same time. Where the approach that many developers or investors
squeezing to the last drop.
Yeah.
You don't do that.
We don't do that,
okay,
and we try to build the reputation.
You must have no Egyptians on the team, but that's for sure.
There's
exactly. The idea of leaving money on the table is not genetically not allowed.
Not possible.
Yeah, not possible. They'll take your passport away.
I mean, look, it's very subjective. When you say leave money on the table, for us, it's okay. How much margin can you make, right? So, what's the maximum that you can make, and if you can really become competitive, and at the same time do things in a more efficient manner so that you can move on to the next one, why not? And it's more exciting to look forward than to get stuck with this and then wait till the last drop and then move forward.
Where do you want to take all of this? I mean, you've built an amazing business over the last 10, 12 years, correct?
So 12 years.
12 years, exactly.
Yeah.
I mean, you seem from the way you're talking and just the body language that you feel you're just getting started. And I've said a few times in our way here something, and you said something to the effect that these are early days. Yeah,
they are early days. So look, we're going to continue to build our what we built best. The future, I would like us to be looked at as a tech company that happens to do real estate, right? Rather than a real estate company that does, that has good technology.
Is it because the multiple is better? Or is it
one reason is that so you can get a better EBITDA multiple at exit. That's for sure.
Your exit multiple will look a lot nicer.
Will be more exciting. It's constantly looked at as a brick and mortar business, but there's a lot more excitement to it.
And how do you? Because I was joking, but how do you make that change? Because I mean, I operate in a similar business where a lot of my business has tech elements, but at the end of the day, when I go to an investor, if I go and raise money from you, you will come ask me, how many restaurants do you have? What is the revenue? What is the EBITDA?
Yeah.
I can show you all the things that facilitate the growth of this business, but it's very unlikely that you will see it beyond the brick and mortar. You're in a similar business. Yeah. It's one of the oldest businesses, something that we've done in the Middle East for many, many, many decades. So how do you make that transition? Is it by showing it in the numbers? Is it by repackaging? And I'm not saying repackaging the wrong way. I guess reframing the story. How do you go about it?
Long story short, I guess it's efficiency metrics. So we want to, through our numbers, through how we do business, how much cash flow can you extract from a transaction? What's the best take rate you can get out of a transaction through evidence of efficiency, allowing that or enabling that. That's how you become a more valuable business. As a business, of course, as a multiple of EBITDA, you're going to try to get the maximum, extract the maximum. In our service business, you'll probably get 5 or 6 times. But in a business that has tremendous growth and showcases that it's grown through efficiency metrics, that allows it to extract more out of every transaction year over year because of how efficient that business is, then you are able to argue for a double-digit multiple, and that's how tech enables these numbers. So if for example you have your system allowing you to do more B2C transactions as a result of how you build the system and how opportunities collide. And then you can take more out of these opportunities because of how efficient you made the business work without many, let's say, human elements to it. Then you're suddenly more profitable. You have better margins, and you're looked at as a more valuable business.
It strikes me when I was doing research for this episode and speaking to you that you prefer for the results to speak for themselves. In other words, when I looked you up, most of what's there is from your official channels, your website, etc. You're in a business where almost everybody has an opinion. If you wanted to be today on, I don't know, CNBC every morning, you could. You've clearly made a decision, I'm just guessing here, that not to do that and focus on growing your business.
Yeah.
Is it because you think it's a distraction? And do you get to a certain point in size where you feel you should have a profile that's known to the public, or is that something you don't care about?
It's really not by design. It's not something I don't care about per se. We're just focused on growing the business. We're focused on what we want to do best. Look, and ideally in 3 years' time, we would be in a position to have a liquidity event through a public listing. How do we do that? It's a process. We started an equity program about 3 years ago in 2022
for your employees.
For our employees, our management, our top performers. So we now have about 34 partners in the business. They have shares.
So all these businesses are connected at one level?
At the holding level.
At the holding level.
Yeah.
Okay, that's
so these guys have equity in the business. They continue to be awarded equity. They bought in some cases. So we
is that unusual?
I haven't seen it in our industry.
I haven't either. That's what I'm asking.
In our industry.
Has it helped your retention?
100%. 100%. It helps.
But it's also incentivized a certain type of partner, right?
Yeah, the top caliber.
Yeah, the ones that really are hyper ambitious. He's the one that's looking behind beyond his package or his salary, whatever.
Yeah, correct.
And he wants upside.
When we first designed the program, we had a debate internally with the leadership team. A lot of these guys maybe don't understand this, right? It's very difficult for them. They're just,
what do I make at the end? I want my commission.
I want my commission, exactly. But then it's surprising and very refreshing to see that 1 or 2, 3 years later, they really appreciate it. They really like it. They come and ask questions. Okay, what do I do now? And we constantly also offer liquidity events for them, right? So, okay, you have these shares. If you want to sell them, here's a tender offer
interesting.
From other shareholders, from other partners.
Oh, wow! You created
which is amazing. It's amazing to see
secondary market from
within the company.
Wow,
yeah. So that's really refreshing to see. That people really start seeing the value, seeing the upside.
That's amazing.
People that bought in 3 years ago, with dividends, only made their money back in 3 years. So all of them are very excited about this. They saw their shares also go up, people buying them at higher prices. So all of these things really helped in creating that culture and that ecosystem.
So I have just, before we get to the end of this, when do you sleep?
It's very volatile. I'm gonna ask who, right?
Between the secondary market for your employees and building your empire, I just don't know. Because you look well rested.
That's really volatile. I can tell you I slept 4 hours last night.
Okay,
but it's volatile. Yeah, it's volatile.
How do you keep it together? Do you have a program? In terms of your own balance, do you have a way to switch off?
Yeah, my switching off is just being with myself. That's my and I think that's
and you know how to do that.
I know how to do that.
Okay.
I know how to do that very well. I enjoy it.
Okay.
I after a certain hour, that's it. I want to be with myself. Sometimes just do nothing. Have green tea and just relax.
Yeah, but calm
down.
That's a superpower.
Yeah,
especially in your business, right?
Yeah.
Where it's you're in a city that is constantly buzzing, and in a business that's all dopamine fueled, transactional, right?
Yeah.
So you can easily just
No, I like at that time as well. I like to read about stuff, learn, and look at what's happening in public markets globally, and what could events that could trigger what happens here in the future, and start to like everyone else speculate, but then have it without reading or having trying to understand what people are saying or what certain analysts are expecting. I make my own conclusions, and I always I never discuss these conclusions. I try
it's for
to,
yourself.
That's for myself. And I think that's where you can if you build it and you have that conviction within yourself and you want to you want to build on it. It's better to keep it for yourself, because many times you're wrong, and then you said something to someone and they take your opinion highly, and then they take an action based on your opinion, and then you shoot yourself in the foot.
And what keeps you up? I mean, when you're looking at your trajectory over the next 5-10 years as a business and as an individual running this business, what is the main thing that would worry you?
Look, I look at global events. COVID was one of them. That was something that nobody expected, and then you have this feeling as, okay, what now, right? And these are the kinds of moments where you have to take action. I think the best growth stories happen in downturns, and at a time when no one wants to act. This is when you should decide to grow and to take up market share, when everybody's afraid.
There's a camp when it comes to Dubai. I know your market has grown beyond Dubai, but still your core market, of course. There's a camp that says that these violent downturns and upturns that we've had, the swings, are a thing of the past, that we have now hit escape velocity. And yes, you might see some slowdown and growth, but you're not going to see these massive highs and troughs. Do you subscribe to that? Or do you think we could go back to what we've seen?
First of all, yes, I do think this is a thing of the past. There's a fundamental shift in how, and there's evidence to it, right? So and the evidence is, I remember the days. I was here in 2008. I saw that. I was here in 2011 and 12, and that upturn. And then I saw that sideway towards down,
until
soft landing kind of move.
It didn't feel soft at the time, but yes.
It didn't feel soft, but but it was. Transactionally, it was very soft. I can tell you that. Looking back, every time we say this time it's different, right? And this is the characteristic of bubbles. No, this time it's different because of this, because of that. But I tell you what's, to me, a fundamental shift. I remember in 2008 and 11 and these upturns, there were moves in the real estate market were index moves. So you see areas like Sports City and JVC moving as much as downtown and Furjan and the IFC and everywhere else. Index. The market goes up 20%. Downtown is up 20%.
Correlation is very high.
Completely.
Almost 100%.
It's the same alpha, right? Today you go to areas that really haven't moved much from with that growth and post-COVID. You see some areas that are subprime areas that have a lot of continuous land supply that didn't really move much. And then you see areas that moved up maybe 3x or 3.5x. Jumeirah Bay Island, for example, a Bulgari 3-bedroom apartment was selling at 10.5 million in 2020 and 2019. Today they're at 35 and 40 million, right? But then you go to areas like Sports City, where a studio would have sold at 600,000 then, and maybe 650,000 today.
Yeah, amazing. Right? Is it supply and demand, or is it high end and low end?
It's complete supply and demand at work. I mean, high end and low end is it's not always that high end
outperforms.
It's not always the case, and we've seen this in different markets. In fact, high end sometimes takes a bigger beating, but it's a supply and demand dynamics at work. That's what's making at least our conviction that this volatility is a thing of the past. We might see areas underperform and overperform, but it will be a function of a future supply of these areas.
Do you think we will see freehold across Dubai? Completely. Everywhere? What we've seen in Sheikh Zayed recently.
I do subscribe to that. So we've seen it on Sheikh Zayed and Al Jaddaf recently, where you can convert your assets into freehold. I suspect that will happen in other areas, maybe towards the newer Dubai, Jumeirah, Suqaim and the likes. Maybe later on that moves on to Deira and Bar Dubai. And
so you think Jumeirah will turn into freehold eventually?
I do think so.
Makes sense, right?
Exactly. There's an opportunity for both landowners and property owners.
Both sides win. I mean, the landowners get liquidity.
Exactly.
People who want to buy can come in.
Get liquidity and an uptick in value. Today, for example, you have a huge arbitrage for GCC on the Jumeirah side. I know that this little area next to City Walk called the Wasl District plots. These Wasl District plots are now trading at 2,200 per square foot, right? They're not the best location because they're very close to Sheikh Zayed. There's an area next to it that has a lot of traffic. but it's trading at 2,200 because it's freehold. You go one step behind it, one street behind it, and you buy them at 750.
Yes,
so
correct.
yeah, 1/3 of the price.
I live in Basha, so I'm the 750.
There you go. So you're the 750.
Yeah.
And Barsha, they're closer to the 500 and 550.
I'll blame my
right?
wife, but I'm not the citizen.
Exactly. So you go one street behind, which is the better street, quieter street, better location.
Yeah.
And you got them at 750,
Yes.
right? And there's this massive arbitrage. So what will end up happening?
3-4x.
It's 3-4x. What will end up happening is probably if they open up the Jumeirah Msuqin
One will
areas,
come down, one will come
yes,
up. It will
the
correct
freehold
some
will come down, and then the non-freehold will come up.
Yeah.
So it will be also wealth creation for the locals, whoever owns in Jumeirah. And so it is, like you said, win-win.
Yes.
I do see that happening.
No, I think that's right. And my sense is because the Sheikh Zayed and Jaddaf it's probably a trial balloon.
Yeah.
They haven't done this before.
Yeah.
And once you start opening that, it just makes sense.
So Sheikh Zayed and Jaddaf was a scarcity issue. Now, as a developer ourselves, there's scarcity of land today. If you are a developer, you want to develop in Dubai, it's nearly impossible. Difficult is an understatement. It's nearly impossible because in the past, the suppliers of land were who? It was Dubai Holding, Miras, Nakhil, Maidan, the large land bank owners. These guys are self-developing now because there's liquidity, the market's good. They don't need to sell land to private developers. There's absolutely no incentive for them to sell land. And so what the government did rightly is offer an opportunity for those who have land in these areas to dispose of them so that there will be more opportunity and more liquidity and more opportunity for developers to go on and develop in these locations.
So do you think we will live through a time in our at least lifetime where this, the road, let's say, between Dubai and Abu Dhabi would be essentially all populated?
Yes,
because it's sort of creeping up. I mean, I grew up in Cairo, where Cairo Alexandria Road, the desert road, what you called at the time, was desert.
Yeah.
And now, today it's, as you know,
populated. Yes,
70%. I mean, it started on the Cairo side, then the Alexandria side, and now you go 200 kilometers into what was the desert. It's all Cairo.
Yes.
You see that happening.
I do see that happening. It's already happening. I mean, we're seeing how the south is developing in Dubai, between Palm Jabal Ali and Dubai South and the Expo City, all the way to Ghantut and Al Jurf projects, and then the north of Abu Dhabi as well. So yes, I do see this populating over time.
Abdullah, thank you. This was very illuminating. I hope you get some sleep tonight.
No, I will. I'll try.
Thank you for your time. And
My
best
pleasure.
of luck.
Thank you, Hashem. Thank you so much. Thanks for having me.
Thank you for joining the Lighthouse Conversations. I'm your host, Hashem Montasser, and this show is produced by Chirag Desai. If you like this particular episode, please press the follow button. Also, go and listen to some of the other episodes. One that comes to mind is my episode with Ayman Bai, an Egyptian entrepreneur who started Bai Hospitality. It also talks about ownership culture and talks about growing a business under very difficult macroeconomic circumstances in Egypt. So have a listen, let us know what you think. If you want more information about the podcast, please also follow us on Instagram at the Lighthouse_podcast. We show some behind the scenes action. You get more information on our guests. We'll see you again in 1 month.